Good day, everyone, and welcome to the earnings call of Air Industries Limited. We appreciate you joining us as we review the company's operational and financial performance for quarter ended and half year ended 30th September 2025, along with our strategic outlook for the future. The objective of today's call is to provide clarity on our Q2 and H1 performance and address any questions from our investors and stakeholders. Please note that certain statements made during this discussion may be forward looking in nature based on current assumptions and expectations. These involve inherent risks and uncertainties, and actual results may differ materially. The company assumes no obligation to update any forward looking statement except where required by law. We encourage participants to consider these factors and avoid placing undue reliance on these projections. Representing Erin Industries today, we have with us Mr. Monish Doshi, Director and Chief Financial Officer, Mr. Karan Doshi, Whole-time Director, and Mr. Paresh Nayak, President. With that, I would now like to hand over the call to Mr. Monish Doshi to provide us an overview of the company's performance. Thank you, and over to you, sir.
Thank you, ma'am. Good afternoon, everyone. On behalf of the management team of Aron, I would like to extend a very warm welcome to all our shareholders, analysts, and stakeholders for joining us on the second quarter and first half year of the financial year 2026 post-earning conference call. Let me begin by thanking you for your continued support and trust in us. I am proud to inform that as per our commitment, we have been marking a steady progress across our operations, supported by strong execution, disciplined cost management, and sustained demand in our key business segments. Our ongoing strategic initiatives, capacity expansion effort, and focus on operational excellence continue to strengthen our foundation for long-term growth. We remain committed to delivering values to our stakeholders through consistent performance and responsible decision making. I will now take you through the key financial highlights of the second quarter and the first half year of the financial year 2026, followed by an overview of our performance, strategy, and outlook. Q2 FY26 performance is as per the company delivered a healthy operational performance during the second quarter. Revenue from operations grew by 15.60% quarter on quarter and 21.59% year on year, supported by improved volumes and continued demand across our product segment. EBITDA stood at 4.18 crore, reflecting an improvement of 12.97% quarter on quarter and 27.8% year on year. EBITDA margin remained resilient at 18.78%, broadly stable compared to the previous year. Profit before tax stood at 2.49 crores, registering a 20.09% sequential growth. However, on a year-on-year basis, PBT remained marginally low due to higher financial costs. PAT came in at 1.39 crores, showing a strong 31.70 quarter-on-quarter improvement, although lower Y-on-Y due to a significant higher tax outflow during the quarter. For the half-year performance of financial year 26, for the first half of financial year, revenue from operation increased to 41.48 crores, a growth of 16.9% year on year. EBITDA for the period stood at 7.88 crore, higher by 19.09%, with EBITDA margins improving to 18.98%, reflecting operational efficiency and cost discipline. Profit before tax for the half year was 4.57 crore, lower by 10.61%, primarily due to higher interest and depreciation, reflecting recent capacity enhancement and ongoing investments. Profit after tax for the first half year of the financial year 26 stood at 2.45 crores compared to 3.69 crores in the previous year, impacted by higher tax and finance costs. Following the financial performance, I would like to briefly highlight our operational progress. During the quarter, we continued to focus on improving efficiency, strengthening customer engagement, and enhancing our product quality. Our ongoing initiatives in capacity utilization, cost optimization, and process improvement are progressing well and will support sustainable growth in the coming period. The demand environment for our industry remains stable, and we are well positioned to benefit from the opportunities ahead. We remain committed to driving disciplined growth, maintaining operational excellence, and creating long-term values for our stakeholders. This brings me to the end of my address. I will now request the moderator to open the line for the question and answer session. Thank you.
Thank you, sir. I would now request the attendees to please raise their hand to ask the question. We'll take the next question from Mr. Shanky Bansal.
Hello, I'm audible.
Yeah, sir, you are audible.
Yes.
Hi, Manish. How are you?
I'm good, sir. How are you?
I'm absolutely fine. So I have a couple of questions regarding the performance of H1.
Yeah.
I think in the last meeting you have guided that this year we will be able to achieve at least a 25% growth. However, if I compare this H1 from the previous H1, the growth is only 17%, and that's why the elevated cost um deteriorate our bottom line. So can you explain that going forward, H2 will be much better than H1, or how the company is scaling up?
Yeah, so sir, as you have like previously also we have informed that always our Q3 and Q4 have been the strongest because of the industry structure in which it is operating. So definitely the second half year will be more better than this one. Additionally, I would like to highlight that this year we faced an unexpected issue due to the long season of monsoon, because it started early and it ended in September. Because of that, the whole industry was affected and many of our projects got delayed in execution. So because of that also we were not able to achieve the 25% which we were focusing. But definitely all those projects will be executed in this coming half year.
So are we saying that we will not able to achieve that 25% guidance, or we are still having an hope?
No, no, definitely we are having an hope for this, and in the next half year we'll be able to see a better progress than this.
Okay, and my next question is about the employee cost. I've seen that quarter on quarter basis now the co employee cost is reaching almost 10% of our top line, quarterly top line. So, what is the rationale behind that? It is uh, does I mean that if you reported in next quarter maybe 24, 25 CR, so your employee cost will be proportionately raised?
Uh, so for the employee cost, currently, as you know that we have recently shifted our major production from Udna facility to Kosamba facility. And due to that, we have to maintain labor force on both the units right now because of ease of execution. Once that is done and once the unit 3 is into full-fledged production, we'll be able to reduce the cost on Udna unit. And simultaneously, we are also working on our ERP system to enhance automation in each area of that department for the unit 3. So eventually, that will also help us to reduce the employee cost in a proportional manner.
Okay, understood. Uh, Actually, considering the first half of the performance of the company is really not very encouraging, because if I see the presentation, even the last presentation, the market size and our company size, you know that it is very small, correct? And we have done the capex of around 35 CR. So I think you should really ramp up your sales to mitigate all these elevated costs. Otherwise, this underperformance is really kill us.
No, definitely we are our main focus for next few years is on expanding our sales only, because we have done that on the capex side, which was our main constraint till last year. So now we have shifted that constraint to sales, and we want to keep it on that side, but we'll be increasing our network in all over India, as well as we are also now exploring out foreign markets also. So from there we'll be able to grab new business opportunities, which would help us in boosting our top line.
Yeah, so my last question on that front only, because I've seen that couple of export shipments is going to Nepal and Kenya, but
Yeah,
and I think you guys are also doing some exhibition in Kenya also in December.
yeah, right.
So, what is the strategy behind that? Do we have any networking there, or what? How we are planning to execute the export market?
Yeah, so from last 7 to 8 months, we were able to develop a base over there in Kenya where we can show the executed projects. So we were waiting for this period only where we have an opportunity to meet maximum people and show them that we have already executed couple of projects in Kenya and they are working well. So this will help us to boost the trust factor of the visitors over there. Simultaneously, we do have a network in Tanzania also where we have been in touch with a few clients. So, meeting with them would also help us in converting new opportunities.
Okay, okay, that's great.
Yeah.
Thank you, Manoj, and best of luck for future. Thank
Thank you.
you.
Thank you very much, sir.
Thank you, sir. We'll take the next question now from Dheeraj Kaswan.
Uh, Hello, sir. Thank you for giving me the opportunity to ask a question. So my first question would be that we've done a lot of capex in the past 3 years. We have been constructing the new facility. It's a much better facility than what we are having the first and second plant. And we were doing like around 1,500 auto doors a month capacity last year. So I just wanted to know like what sort of ramp up have we done in the past 3 months? Like at what capacity we are working right now, and what are your internal targets for like the end of FY26, 27, 28? Like what targets are you working on that you have to reach this capacity utilization levels?
Yeah, so previously, when we were doing 1500 auto doors, at that time, our main constraint was of the production capacity. And because
Yes.
of that, we had to go for the capex and
Mm.
we went with Salvigny. With that, the capacity has increased exponentially, but simultaneously, we are now exploring the sales market. We are exploring the market to increase the sales.
Mm.
So, for last 3 months we have been continuously increasing our production capacity as well, production output as well as the sales market, and our target is that within like 1 or 2 years, by the end of financial year 27, we'll be reaching around 3500 doors per month in sales. So that
Okay.
would be an average which we are targeting right now.
Yes, sir, exactly. You were talking about like you have certain clients, even right now, you have clients that you can supply more capacity to them, but because of the constraint, you are not able to do so. And there is a lot of market, even in like the neighboring states, Gujarat and a lot of neighboring states, there is still a lot of potential to supply to most tier 2 and tier 3 cities. Actually, I live in Vapi, and I have done some market research. I have seen that a lot of firms here are your they take supply from you. Like there are a lot of
Oh wow,
manufacturers, a lot of
that is very nice.
yes, yes, I've talked with two to three, elevator companies here, and they're very well versed with them. Even a company that I talked to, they were your customers, but even if they haven't taken any supply from you the past 2 to 3 years, they still have a lot of praise for you. And so
Right.
exactly
That
that's
is
why
good to hear.
yes, there is a lot of good sentiment in the market if you see the tier 2 and tier 3 players. However, there is some competition. I've heard that there is another competitor in Surat, which if we are facing some problems there, but we are still on a much higher scale than them. So that's why we are able to cater to the market. So
Right,
my
right.
question is, we were also talking about in end of FY25 that we are looking at, if we can supply to any tier one players. Like we were in talks with someone you like. I know you can't reveal the name, but at what stage of the conversation are we at with them? Like, are we still negotiating just about? Uh, yes. So just can you elaborate something on that?
Uh, Hello, good evening, Paresh here. I would like to answer
Mhm.
this question. On
Yes.
the tier one, can you hear me?
Yes.
Hello?
Yes. I can hear you.
Huh. For tier one customer, the process of enlisting is now completed. So now we will be going through the product testing and all the other stages. So we are pursuing it consistently, and this will happen in next few months because the whole process over there for registration itself is very long. So that we are doing it. So rest assured, that business also we will grab shortly.
Okay, okay, that's amazing. Like so that will go on for around 3 to 6 months is what I'm thinking.
Yes, yes, yes.
And like what more processes will come after that before we actually start supplying to them? What is the timeline?
See, actually, what happens is that these tier one elevator operators, they have already tie-ups with other manufacturers. So for them, the commitment with those customers are already been given. So they say that it will take some time for us to switch to the other manufacturer, the contract manufacturer. So it may take at least 3 more months.
Okay. Yeah, yeah, so it will be like that we become the unauthorized vendor for them, but the
Yes, at
orders can
present
come
the
at any time.
process, at present the process of registering is going on. So
Okay.
our products have been approved, so there is no issue on that front. But now the final commercial deal and the order projections, they will be giving it to us.
The quality inspection and all of that is still remaining, or we have been approved for
No,
that
we
also?
have done it. See, on the product side, we have already done it. On the stainless steel sheet part, we have already started supplying to some national players. So
Acha.
that part is over. Now it is question of doing the contract manufacturing for the bigger player. That is going on. Steel supplies have already started to a few major players, the national level players.
Okay, great. And okay, so we have two divisions, yes, our stainless steel division and elevator division, and we have started with the stainless steel. So is our EBITDA margins the same in the stainless steel division? Like most of it
Yeah.
is used in-house only, and like it is a loss-making division, but it's used for our internal purpose, so that's fine. But I just wanted to get some clarity, like what are the margins that we get from outside players?
Yeah, so right now, basically, because our books are combined, the EBITDA margin is shown as a whole revenue. But if I tell you that for steel business, normally the margins fluctuate from 15 to 20% uh, in all type of products. When we average that, like all type of finished sheets, when we compare that, it is between that range. For doors, it is from 20 to 25%. But we have few specialized steel which would go up also depending on the demand, but that is for a specific projects. So for the average, if I tell you that the margins will be 15 to 20% for most of the steel business.
Yes, sir, and I'm seeing that we have had an increase in our gross margin. Like last year to this year, we increased our margin from 35.7% to 37.8%. So that is a huge, like 110 basis points. And the main reason our EBITDA also increased by 1%, but that was an understatement because our employee expense and other expenses increased as a percentage of revenue because we had to do maybe a lot of onboarding for the new plant, maybe some other expense for the expense in the new plant. So we can see our EBITDA margin increase to even 20 to 23% as our utilization increases in the new capacity, right?
Yeah, definitely. Our focus is on that only by increasing the productivity and also by implementing automation. We want to achieve higher margins on that only. So all our efforts are in that direction, and definitely we are more oriented on achieving that margins.
Okay, great. Thank you, sir. Just one last question, then next person. Can you
Yeah.
give some commentary about what is this Telix product that you have introduced now? Like, what are
Yeah,
your
so
expectations for this?
Stelix basically it is a brand name which we are promoting for our steel business. Normally, we are into elevator business, and major customers of our steel are also from elevator business. So for them, we wanted to introduce as a different brand name which they would be able to use openly, and they'll be able to promote it to their customers also. So we didn't want to make our steel business competitive for them. That's why we have developed a different brand name and we'll be promoting it under Stelix. Like few major like national players which Paresh sir told, they didn't want the brand name with Aron because all their customers also know that Aron is an elevator company. So that would show those players like negatively. That's why we developed this a different brand name which they can promote it easily, and for decorative sheets they can show our catalogs to their customers. So it is a brand name, it is not a product. It is basically focusing this steel business only.
Okay, so it's just a branding, so we can supply to national players.
Right, right.
Okay, okay, perfect. Thank you so much, sir, for answering the questions and all the best for the year ahead.
Okay,
Thank you.
thank you very much, Dheeraj.
Thank you, sir. We'll take the next question from Akshida.
Yeah, hi. Am I audible?
Yeah, ma'am.
Okay, sir. So, a few questions. What would be the break even now that we have had the facility unit 3 for at least 4 to 5 months now that is operational. At what capacity utilization do you think that would be break even for us?
Ma'am, could you repeat the question? Your voice got cut.
Hello?
Yeah,
Yeah, so sir, the new capacity that we have live, the 35 crore capex in the unit 3 Kosamba plant. At
yeah.
what utilization rate would we consider that it has reached break even for us?
So right now the utilization would be, I would say as per the production capacity, we are close to around 35 to 40% right now. And basically, for the break even point, I think it will take around 3 to 4 years for us to completely clear off the interest cost and everything, and will be like for the capital utilization, and then uh, the capacity, based on the capacity and based on the market reach, we'll be able to cater it more.
Okay, so you mean 3 to 4 years of payback time is what the capacity
Yeah,
will need.
basically, ma'am, this machine, like the machine which we have installed, has a life of more than 25 years, and it is a continuous production capacity. So normally we don't see it as a 3 to 4 years target, but yeah, for the interest part, we are targeting that we'll be able to clear it by 2029.
Okay. Okay. And so, I mean, we have a very big, I mean, demand environment is good in India as of now, especially in the regions that the company operates in. So, what's the logic behind going into export markets like Nepal or Kenya and maybe Tanzania, like you mentioned? Because I assume logistics cost will also be something to factor in. And when we do export to these countries, traditionally it is seen, especially in Africa, that getting the money from a customer is something of a hassle. So if more and more revenue does end up contributing from there, it's possible that the working capital gets extended overall. So what is your view on the same?
Hi, Paresh here. I would like to answer this. Uh, See, the expansion on the export front is only after the due diligence. We have shortlisted partners who have the capacity, and it is all against the documents from the bank. So we do not have, it is all LC driven. So we have none of our capital is stuck anywhere, and it is against advance. So this will only help us to increase our bottom line, because in those export orders we are able to give very specialized products which they are not able to get at their in their country or manufacture in their country. So rest assured, we have done all the due diligence. All our processes are through the financial institutions, and none of our money will get stuck on in that.
Okay, so sir, do we then expect better margins while exporting? And what do you believe?
Yes. The better margins will be there, but yes, the volume will increase in a time to come. So we cannot
Right.
expect a very huge rise, because this
Right,
export it takes some time to establish. Our products
right,
have gone there, so and we are even participating in one of the exhibition in Kenya. So that should take at least 6 or 7 months more for us
right.
to get continuous business from there.
Right, so that was my actually the next question, that what percentage of exports do you think this year will contribute to the company? If not this year, if it's too
We
early,
are we
then
are
for
we are
27.
we are working hard on it, keeping our fingers crossed. I will not be able to commit on the numbers, but yes, you will see good numbers in that.
Okay. And so for the tier one process, I mean, the company has been in talks that this will be done, and it's good to see that you have made progress here. But my question was that would margins be sustainable? The margins that the company makes as of now, would those continue in that, or would you be squeezed a little to get the volumes
Yes.
that we need?
See, tier one customers, they always please their suppliers.
Right,
That is the model of the business. But
right.
the increase in volume helps us to buy more raw material and get better utilization from our machines. So this whole business of getting contract manufacturing orders help the overall health of the company. The margins may get squeezed, but yes, we are able to extract good margin from the specialized products that we make. That is the advantage that we have, and that is the specialty that we have. So this tier one business will only help the company to grow further.
Okay. No, so because if this ends up becoming a significant part of the business, and I think that is the intention as well behind putting up the capacity,
See, we
then
please carry on. Please carry on.
yeah, so it was just, I understand that you will have economies of scale, and you will get a more, directionally better margins, as well as because it's a continuous process, like you mentioned in the unit three, then utilizations will also be better. But if we are able to just maintain the margins that we have done while supplying to a tier one company, then I think that is the sense that I want to get.
Our tier two and tier three city customers base is increasing parallelly with our efforts for the tier one customers. So we are very conscious on our margins, and you have seen historical data also that every year we are growing on our margin and on our sales also. So that way, we have a very keen eye on the total overall business and the margin part. So rest assured, we will manage that. And on tier 2, tier 3 cities, we have already expanded well on the business partners, our warehouses. So that is going on aggressively. So not to worry.
Okay. So we do expect that more or less margins should be maintained while we focus on the volumes.
Yes, yes, yes. Our
On
efforts are
on a
on that.
blended basis, obviously, but yeah, that will be maintained.
Yes, yes.
Okay, okay. And so I wanted to know more about the demand environment overall. How is the elevator market? We recently had another competitor also which got listed, and the demand environment is something because that will differ on the geographies that the customers are in. So I would like a little bit of a breakup of where the customers are located for us, the west, east, etc. for this quarter, and the demand that is coming to the company, the supplies that we would be doing, where that would is coming from. Is the mix same? Is it changing?
See, our customer base is spread throughout the country. Uh, till last year, we were more focused on the west. Now, due to the expanded network, we are equally strong in east. In North, we have recently appointed a dedicated person to develop North market. South, already Karnataka and Andhra Pradesh, we have a very good set of partners who are promoting our products over there. So, if I see till date, the major part has come from the west and south, but now we are and east, of course, is since last year the it has increased a lot. So now our focus is on north, and north we are getting a very good encouraging response from the north. MP, it is already there. And even as we have presence in Kolkata, our own warehouse and our own team. So in the Northeast, the Seven Sisters, from there also we are getting orders. So overall, we have kept a good balance on the our spread in customers, and throughout the country we have a presence now.
Okay, sir. Okay. Yeah, I'll get back in the queue. So my questions are answered for now. Thank you so much, and all the
Okay,
best.
thank you.
Thank you, ma'am. Do we have any other question from any other investor? Since there are no further questions, I would now like to invite the management for closing remarks.
Yeah, thank you, ma'am. So, thank you very much, everyone. And we are glad that you have been taking interest in our company. And I'm happy to know that so many of you have been attending, like they have already attended the previous meeting. Now, even also they have been attending. So, I'm glad to have your support, and we'll try our best to uh, achieve what we have committed, and definitely to enhance the trust which we have you have kept on us. Thank you very much.
Thank you, sir. On behalf of Erin Industries Limited, I thank you all for joining today's call. You may now disconnect. Thank you.